how small apartment investors can rebalance portfolios. First, review portfolio performance reports to get a clear sense of where things stand. Next, analyze current allocations. Compare actual asset allocations to target percentages, like, say, equities at 40%, fixed income at 30%, real estate at 20%, and alternatives at 10%. Now evaluate performance. Identify which assets are overperforming and which are underperforming by looking at returns, risk metrics, and benchmarks. Finally, identify rebalancing needs. Determine deviations by assessing which allocations exceed the threshold. For example, maybe equities have increased to 50% while fixed income has dropped to 25%. So, the next step is to prioritize your adjustments. Focus on rebalancing those assets that have the largest deviations from your targets, or the ones with the highest risk exposure. Now, it's time to actually rebalance your portfolio. You'll want to sell overperforming assets by reducing allocations in those that have exceeded their target weights. For example, you might sell part of an equity position that's grown from 40% up to 50%. And then, go ahead and reallocate to underperforming assets. That means investing the proceeds in assets that are underweighted to help restore balance. For instance, you could increase your fixed income allocation from 25% to the target 30%. So, let's talk about incorporating your market outlook. When making tactical adjustments, it's important to consider short-term market conditions before reallocating. For example, you might want to overweight bonds if you're anticipating a downturn in the market. And while making these changes, always make sure your adjustments are aligned with your strategic asset allocation and your long-term investment objectives. Let's look at an example of rebalancing a portfolio. Say your initial allocation or your target is 40% in equities, 30% in fixed income, 20% in real estate, and 10% in alternatives. Alright, let's dive into the current allocation after the recent market movements. Equities are sitting at 50%, which is overweight by 10%. Fixed income is at 25%, underweight by 5%. Real estate remains steady with no change at 20%. And finally, alternatives are at 5%, also underweight by 5%. Now, let's talk about the rebalancing actions. The plan is to sell equities to bring them down from 50% to 40%. The proceeds from this sale will be allocated to fixed income, increasing it to 30%, and to alternatives, bumping them up to 10%. So, what's the outcome of these actions? Well, we've restored the target allocations, reduced the risk from overconcentration in equities, and enhanced the portfolio's diversification. That's a more balanced approach, wouldn't you say? Let's talk about the benefits of rebalancing and monitoring for small apartment investors. First up, risk control. Rebalancing helps prevent excessive exposure to volatile or overperforming assets. It's like having a safety net, ensuring your investments don't go off track. Now, moving on to enhanced discipline. This process encourages systematic portfolio adjustments, which is key in avoiding those emotional decision-making pitfalls. It's all about staying on course and making decisions based on strategy rather than impulse. Finally, let's discuss alignment with goals. Rebalancing keeps your portfolio in line with your long-term investment objectives. It's about ensuring every step you take leads you closer to achieving your financial dreams. Improved diversification reallocates capital to underweighted asset classes, enhancing balance and reducing risk. So, how do you develop a rebalancing plan? Start by setting rebalancing rules. Define thresholds for action, for example, rebalancing when asset classes deviate by 5% or more. Then, determine the frequency based on asset class volatility and transaction costs. It's important to evaluate your portfolio regularly. Schedule periodic reviews to track performance and identify any deviations. And consider using portfolio management software or tools for automated alerts. Incorporate tax planning. It's important to prioritize tax-advantaged accounts for rebalancing when possible, as this can help minimize tax liabilities. Also, consider harvesting losses to offset gains. Monitor the long-term impact. You should assess how your rebalancing decisions contribute to the overall portfolio performance and risk-adjusted returns. In summary, rebalancing and portfolio monitoring are essential for small apartment investors. They help maintain target allocations, manage risk, and align portfolios with long-term objectives. By systematically reviewing performance reports, identifying rebalancing opportunities, and considering tax implications, investors can make informed adjustments that optimize portfolio stability and returns. Integrating regular monitoring and disciplined rebalancing ensures sustained financial success in dynamic market environments.